Meantime, take a look at the price of gold today. It had been down throughout the morning, and now we are seeing some buying as we are seeing this rumor mill heat up. A lot of concern about what is happening going into the weekend in Germany in particular. Bloomberg News now reporting Germany is creating a plan to protect its financial institutions should there be a Greek default. Why? We'll take a look at the credit default swap market, and it will tell you that the bets are on that Greece will default. The question has been when. And that immediacy in today's market is reflected in the selling of financial shares in Germany and the buying of perceived safe havens. We've just seen those headlines cross and gold turn around up $1.50 right now. But whether it's what's happening in Europe or what's happening in the U.S., jobs are on everyone's minds, particularly after the president laid out his plan to stimulate the economy last night. From Wall Street to Main Street, Americans are looking for a fix for the high unemployment rate. Now, did the president say what they wanted to hear last night? Let's get a take from the C-suite. Joining us now is Richard O'Brien. He's the CEO of Newmont Mining, America's largest gold producer. Welcome to InBusiness, sir. Did you hear anything in particular that would change the way that you invest in your own business, given what the president laid out tonight?
No, I don't think the president really addressed anything that would significantly change our focus in the business. We're building the business anyway. We've got 400 plus jobs available in North America right now. We're going to continue to invest. We believe in the bullish gold market. And I think with respect to that, the president's speech really didn't do anything to suggest that longer term, the political environment in Washington, D.C. is going to improve to allow the U.S. dollar to gain strength. And without that, I think we continue to be very bullish about our business, so we'll continue to invest.
You are bullish about your business. We're looking at gold itself, trading around $1,900 an ounce. So you're in an unusual position right now where there is large demand for the product you put out there. Not every corporation is along the same lines. Is it just political certainty that you need, or what is it that a CEO like you would need to hear to create more jobs beyond demand?
Yeah, that's a great question. I think that what CEOs really need to hear is that we're not just looking at one-time job creation, but an environment into which longer-term job creation is a real possibility. And I think that happens with a couple of things. Regulations which work. So I don't think we mind being regulated at all. I think we just want to make sure the regulations work. And I think we want things to work quickly so we can put jobs to work. I think we also need to know, what is the tax environment going to look like when the president and Washington, D.C. can't seem to settle on a long-term tax policy? I think that uncertainty robs us of what we need to really put capital to work. So I think a couple of things in the short term: job creation, terrific that the president's focused on that. I think the deficit piece of this is really important to resolve. And I think just the focus on America on something positive, we really need to turn the corner here, and I hope that Washington can come together and support the right portions of what the president put forward and really work on those portions, like how is it going to be funded in ways which are long-term responsible.
And Richard, we've been talking about how to create jobs. A big part of that always is based on actual demand for product. I'm looking at gold just below $1,900 an ounce. Do you think it's going to touch $2,000 in the next few months?
I think it will. I think given the uncertainty we see in Europe, given the continued uncertainty in our own resolution of fiscal responsibility, I think that the U.S. dollar looks weaker to me, and I continue to believe that with that, we'll see a higher gold price. I think $2,000 in the next 6 months is achievable.
In the next 6 months, looking at where we are now, that doesn't actually sound like too much of a challenge. But given what we've seen,
it doesn't.
No, and given what we've seen with traders and out on the COMEX, with them raising the margin requirements to make it more expensive for speculators to place bets, when that happens, your equity price also takes a hit. How are you dealing with that right now?
Well, one of the things that we've done in the last 6 months is we announced an innovative dividend policy. So we actually have our dividend pegged to gold prices. So as gold goes up, we share more cash with shareholders. And as a result of that, I think that helps offset some of the margin requirements that people might have because it actually returns cash currently when gold goes up. and we're the only gold company to have that unique policy. So that's part of how we're trying to respond to that, and more importantly, give cash to shareholders in a time period where they're looking for certainty. They want a safe haven to invest in, and a safe haven with a yield. You can't get that in the gold ETF, but you can get it in Newmont.
Alan Greenspan, former head of the Federal Reserve in this country, just saying that gold should be viewed as a currency, not a commodity. Do you agree with that?
I do. I think in this environment, gold is trading more and more as a currency, even though we see really great fundamentals on the physical demand side in China and India because of the burgeoning middle class. We are also seeing real demand by central bankers to hold more gold. Why? To diversify their reserve portfolio. They don't want just exposure to the U.S. dollar. I think uncertainty of bank stocks in particular also helps convince people that they should diversify their currency holdings.
And very quickly, you were talking about having more cash paying out in a dividend. Why not on M&A?
M&A is still an attractive part of the business from time to time. I'd say right now, we really are focusing more on internal generation of prospects rather than buying them in the marketplace.
Yeah.
We still see juniors and mid-level stocks as pretty expensive.
Newmont Mining CEO, thank you so much for making time for us, Richard O'Brien.